Welcome to Digital Securities in the Capital Markets, a special presentation of the Canadian Securities Exchange and its partners. Join us as we dive into the evolving world of digital securities, including new innovations in capital and debt financing, with an eye toward the critical themes of sustainability and regulation. We will also explore the intersection of digital assets and the world of art and entertainment, presenting a new era of opportunity for creators and investors alike. Where education meets opportunity, this is Digital Securities in the Capital Markets.
Hello and welcome to Digital Securities in the Capital Markets, a proud presentation of the Canadian Securities Exchange. I'm James Black, one of your co-hosts today, joined by Anna Serin. How are you doing today, Anna?
I'm great, James. How are you?
I'm wonderful, and I'm really looking forward to today's program. That trailer at the beginning is just a snapshot of everything that's going to come up today. We've got a nice 2-hour program coming right up. And Anna, just tell us what people are to expect today in the theme of this event, because I know you put a lot of work into this. You're the host of many of these sessions. What are people going to expect today?
I have to say this has been one of my favorite events put together so far. I personally have learned so much about digital securities, digital assets, and the explosion that's happening on the market. So I hope everyone gains something from today's event. We're going to get into the actual capital market side of things. So there's lots of information out there on how you invest in cryptocurrencies. There's information on how to invest in NFTs, but we're going to get into the companies that are coming to market that you can invest in that are focused in those areas. So I think there's a lot of great information. We're going to talk about sustainability. We're going to talk about banking. And of course, we're going to talk about the world of arts and entertainment coming into the digital security space.
Awesome. I'm really excited. I hope those watching are as excited as I am. But before we start the program, I just want to thank our sponsors. I got to thank Purves Redmond, MMP, and Gowlings, all for their support. And as well, our media sponsors, CFN Media, who helped us spread the word for this event. So once again, I don't want to get in the way of all this great content. Enjoy the show today. We'll see you about halfway through, and looking forward to it.
Hi, everyone. Welcome to this keynote session. My name is Ben Davis. I work at Supercript, which is an insurtech insurance and Lloyd's broker in London, UK. Originally from Canada, moved over about 6 years ago, and I deal pretty much exclusively with digital asset companies all around the world. We're going to be talking about digital assets from past, present, and future. And I'm joined here by Mark Carlson, who will kick it off for us.
Thanks, Ben. So like Ben said, my name is Mark Carlson. I work in Vancouver, BC, a company called Purves Redmond Limited. We're a commercial insurance brokerage, working on all types of businesses. I specialize personally in new and emerging markets and risks, with a particular focus on cryptocurrencies and digital asset companies. So as Ben said, we're here to talk about exactly that, cryptocurrencies, digital assets, and all of these things. We're going to start in the very way at the beginning, in the past, we'll move into the present, and then where we think this is going to go into the future and what that's going to mean for businesses everywhere. So I'd like to start by saying the word cryptocurrency is starting to annoy me a little bit as it's very misleading. It's anything but a currency these days. There definitely are currencies. That's absolutely where it started. However, what that has moved into and how that has changed, we're going to get into and we're going to talk about. So we'll start at the beginning. To start at the beginning, we got to go back all the way to 2008. And so in 2008, the world suffered a financial crisis. Wall Street had melted down and people were frustrated. In particular, a person or persons named Satoshi Nakamoto was extremely frustrated. He or she felt like the financial system was had the cards stacked against regular people, that bankers were able to run amok and do whatever they wanted with no punishments whatsoever. So the solution that this person or persons came up with was, let's create a peer-to-peer transfer system or electronic cash system whereby we don't need to use banks, we don't need to use intermediaries, and we don't need to trust anyone but ourselves. We can take the power from the bankers and move it back to the people. And so they did. And so this person wrote a white paper called Bitcoin, a peer-to-peer electronic cash system, and they published it online. What that paper outlined was the theory and the initial blueprints or plan, if you will, of how to create a trustless cash system. And so that trustless cash system, Bitcoin as we know it today, was initially launched in 2009. Basically how it works at a very, very simple level is it uses computing power to process complex mathematical equations. As soon as one of those computers solves the equation, they're awarded some Bitcoin, which is often called mining. And so what that does, we're not going to get into the technical details of it, but it verifies the network. And so it allows a whole bunch of different people to connect to the network. You have some miners, they're verifying all the transactions on the network, and that runs the network, and that creates what's called Bitcoin. Bitcoin was released. It was just a very, very few people were initially using it and talking about it in some very small corners of the internet, forums and things like that, often cryptographers and people who just had a passion for that idea and that type of thing. Eventually, on May 22nd, 2010, it's often known as Pizza Day today, one person decided that they would send two large pizzas in exchange for 10,000 Bitcoins. And they did that. From that moment on, it now had a public and assignable value. From there, exchanges were born where people could buy and sell Bitcoin for money. So things like exchange trackers, similar to like a stock ticker tracker, were created so we could track the price of Bitcoin. And the system was born and it started operating how it was intended. It had now value. Is there intrinsic value? This is often debated. What I think a common argument to this is what has intrinsic value? Fiat currencies, so government currencies. Why do those pieces of paper have value? Well, because the government has assigned it value and society has accepted that it has value. Therefore, society accepts it as a medium to exchange value and to process transactions. So Bitcoin is operated in a similar manner. It has value simply because people have assigned it value. As the technology progressed and as Bitcoin increased in value, people started to look at that white paper and started to look at it and think about it through a different lens and a different way. And they realized instead of just having numbers in that ledger, why don't we add some computer code and actually enable ledger and the whole system to handle things other than just processing money or financial transactions. And Ben, I think he's going to talk a little bit about that.
Thanks, Mark. Yeah, so just like Mark said, it originally began by transferring value from one party to another. But actually the rise of Ethereum, which was the kind of the next big blockchain that came out, mirrors the rise of actually kind of, businesses like Napster and LimeWire. If we call, in Web 1.0 is kind of the first version of the web where people were posting on forums and having chats about topics that they really cared about, to then kind of moving to smartphones and social media. We can look at actually the rise of Web 3.0 or digital assets and blockchain technology in kind of the same way. You had Bitcoin, which is essentially, one person transferring value to another. And then you had Ethereum, which lets people actually build new businesses on top of the blockchain. It was modeled on Bitcoin, but it allowed developers to code smart contracts, which is essentially just, traditional computer code, but it was it would allow the developers to make new and exciting business models on blockchain technology without any third party getting in the mix. Just like Napster and LimeWire, with the first iteration of the internet, allowed people to share media instantaneously, Ethereum is kind of doing the same thing in terms of allowing people to build businesses. However, when LimeWire and Napster allowing people to share that media, it was, obviously massive media proliferation, and it shook up the media giants at that time. Blockbuster, I remember as a kid going to Blockbuster and other home video stores, and now they're all out of business just because of the way digital media has now been exchanged. Now, of course, when you exchange digital media, you don't actually get the original copy of that piece of media. You get a copy of it. And that's how the media and that's the web that we know today. However, what Bitcoin and Ethereum have done is essentially it's introduced digital scarcity back into the web. It allows a verifiably original copy to be transferred from one person to another without a third-party intermediary. And that's given rise to these new business plans on Ethereum, like non-fungible tokens or NFTs, DeFi, which is a new decentralized finance system, You had people raising equity, digital securities completely on chain. You've had things like ICOs, so initial coin offerings, people raising money for their company without giving equity, but promising them returns when the business launches. And so what we had as it started off kind of like Web.1, where it's almost kind of binary, one person gets something from another. You have now this new way of creating value, which is creating businesses on top of blockchains, just like businesses are completely web-based and completely digital today. And this really kind of sets us up nicely for what is to come in the next, let's call it, 3, 5, 10 years in the digital asset space. So I'm going to turn over Mark to lead us off with that.
So moving forward in the digital asset space, and I think it's important to really try and imagine this, because just like we said at the very beginning, it's very difficult to predict, let's even say 10 years into the future. And so going 10, 15, 20 years in the future, it's very difficult to wrap your head around it. Like Ben said, when you're going to Blockbuster, the idea of accessing a video on your computer sounded crazy, because why would you go into your office to watch a video when you want to watch that video on your TV? Not thinking about the fact that, well, eventually you're going to have a computer attached to your TV and enable you to do this. And so I think similar things are going to happen when we're talking here about the difference between Web 2.0 and the difference between Web 3.0. So it's difficult for people to get their minds around how the technology is going to change going forward. However, it's already started and it's already happening. One of those places, like Ben said, is in digital scarcity and the economics of digital files. Previously, way back when cassette tapes and radio was the predominant way that people listened to music, in order to share one of those files, it was extremely difficult and it was of poor quality. You had to make a mixtape and sit and wait by the radio and hit record, and you probably get the DJ on there, and it wasn't very good. Well, once Napster and these file sharing services came out, the economics of those digital files, especially for for the content creators, plummeted to nearly zero. It was almost worthless, because anybody could copy and share that file all over the world instantly with no loss to quality, and use it for free at a relatively low risk. And so what that did is that meant that the content creators had to look for new ways to make up the financial shortfall that they were now suffering because of that ability of the consumer to just share their files. Lawsuits, they tried, it didn't really work. They needed to find a different solution. The solution was, if you're going to compete with free, is to make it so cheap that it's now easier for the people to just pay for it than it is for them to steal it or pirate it. And that was the birth of things like Netflix and Spotify. What NFTs are now doing, and NFTs being non-fungible tokens on a blockchain. So if you create a piece of media and publish it on a blockchain, is it brings the scarcity back. It enables the content creators to not just benefit from their shows and from the initial creation of that, but also moving forward into the future. Another good place to think about this is ticket sales. So when a company sells tickets for a show, somebody, scalpers in particular, will buy up those tickets, they'll mark them up, and they'll sell them. The original publisher of those tickets and the artist who's putting on that show gets no benefit from that second transaction. They only benefit from the initial ticket sales. Then the economics sort themselves out. The scalper adds no value, just increases the price of that ticket and then sells it on the street. If they publish that on an NFT digitally, that's not possible anymore. They can set a fee that the original, the publishing company and the content creator will get a benefit from, and they're able to now benefit for every single transaction moving forward from that initial ticket sale, and then all of the secondary sales as well, which is great. It shifts the economic benefit away from the people who are just adding no value into the supply chain, and shifts it back to the people who should be benefiting it from in the first place, which is the creators and the people hosting and taking all of the costs of putting that show on. So that's one area that we're really excited for. Another area that we're really excited for is distributed computing. So distributed computing, what it does is it literally distributes the computing power. And so the way that we're all accessing this talk right now through a web server and online, this file is stored in a central server somewhere, and all of us go on and we access that server, and we pull the data from that server, and it sends it to our phone or our tablet or our desktop PC, and that's how we access this talk. And so what distributing computing does is it takes, instead of having a centralized server, It decentralizes it, and you have a little bit on everyone's computer on the network, and we all share amongst each other. And so what that does is it does a couple things. Is it takes down the costs because we don't need to have these giant server warehouses and we don't need to host all the files. And it also adds security. And this is a big one because right now globally, one of the most underinsured risks is cyber risks and cyber hacks. And so we hear about them almost on a weekly basis of another big company having their database hacked and breached. When you decentralize things and you spread it amongst a lot of different people with the proper encryption technologies, which blockchain is utilizing, is it drastically increases security. And the reason that it drastically increases security is because the entirety of the database or the entirety of the server or whatever it is that we're storing isn't stored in one place. It's stored in a whole bunch of different places. And so even if a hacker was able to find out where one of those server locations is, they're not going to be able to access the file because they only have a small portion of the file. And so when you distribute things, like I said, it increases the security and also increases the speed and the benefits for the end users. And so that's another area that we're really, really excited about. Ben, do you want to continue on?
Yeah, I think just to close it off, I think what's really exciting for me specifically is the concept of the metaverse, which is essentially the confluence of a lot of different technologies to build a completely virtual environment where people would interact with each other through avatars. So let's just, that might sound very kind of airy-fairy, but essentially, if you've ever watched Ready Player One, that movie is a great example of what a metaverse would be. So for a concrete example, instead of, us talking through computers like this, we'd actually be able to put on AR headsets and meet virtually at a destination that we'd pick out. It's a world that's superimposed across the physical world. So instead of having to be completely, on a 2D screen, we could actually see each other in 3D and interact, sell, do business, and people would live and pretty much have their entire lives in this metaverse. Now, the metaverse cannot happen without blockchain and crypto assets. It needs to be underpinned by an immutable ledger that can keep track of multiple complex transactions without third parties getting involved. Crypto assets, actually, and NFTs and things like that, digital assets that are secured by a distributed ledger system like a blockchain, is a perfect example of something you trade in something like the metaverse. We've got projects like Decentraland, which essentially sells pieces of virtual land to people to buy. And this Decentraland is one of the cutting edge projects that are ushering in this new era. It might sound a bit weird for people like us because we've kind of been around since the invention of the internet, the laptops, smartphones, and things like that. But if you look at people that are 13, 14, I think 87% of them are interacting with video games or in some sort of virtual land. And so, this isn't anything new for them. This is something that they would just think that is a natural extension of what they have today. And so this is coming, and this is going to bring a lot of amazing opportunities for businesses around the world if they can ride the change. I mean, think about insuring NFTs in game, right? Think about if you've somebody that's spent a lot of money on a new costume for their avatar or bought a piece of land in game and there's been a hack or somebody's tried to take that from them or exploited something. Imagine it kind of insuring, metaverse land and metaverse assets. I mean, the opportunities are pretty much limitless. And so that's something that I think we're really excited for because it's going to bring so many new and exciting business models that we didn't even know existed before. So the future is definitely very, very bright in digital assets. And I think, we're only scratching the surface still. We're maybe 12, 13 years into it now, and we're really still just beginning. So this is really exciting. So I think we'll end it there. We could probably go on for hours and hours talking about all the cool opportunities that are coming out. But thank you so much, Mark, for joining me today. And if anybody has any questions, please feel free to reach out to us. Thank you.
Thank you.
I am joined today by two wonderful colleagues, Andrew Grovestine, who is VP of Clearing and Settlement with the Canadian Securities Exchange, and Eric Richmond, who is CEO of Tetra Trust. Thank you so much for joining me, gentlemen. I think, these are really important dialogues that we need to have. And I'm really hoping the one thing that we can gain today is some proper understanding and knowledge around, what the CSE is building and what's happening with digital securities coming to the capital markets, because we're seeing it happen quite quickly and lots of innovation that's happening there, and how we are partners with Tetra Trust. So I'm going to start with you, Andrew. Can you just explain to us, obviously the CSE is an exchange in Canada. We've been around for just under 20 years. We have over 700 listings. So that is the nuts and bolts of the CSE. Hopefully you know who we are. But Andrew, tell us about what you're doing with the CSE. You're working on something pretty exciting.
Sure, thank you. For the better part of the past 3 years, CSE has been working on what they call a security tokenization project. And that project in itself is wide in breadth and depth, and will capture both how the issuers issue public equity, how the investors invest in it, and how the dealers bring both the issuers and the investors together. So, it's a very technical project on one hand, and on the other hand, it's a large-scale education of where sort of the markets are going. So, from a technical perspective, we're looking at our issuers in Canada and new issuers, and looking to offer them a wider array or a wider assortment of the type of equity that can be offered and the attributes of that equity. And we do that by introducing the notion of a security token, where we'll allow certain fractionalization, will allow the ability for dividends to be paid or royalties to be paid on a much higher frequency, and just overall flexibility of how an issuer can set up their public equity. And then you look on the investor side, and we start to bring in direct and indirect benefits, such as trades settling on a T+1 basis instead of a T+2 or 2 days cycle. So we're shortening that down by half. We're allowing the dealers and to more often than not be able to allow issuers or the investors access to issuer primary market access, where traditionally that's been an institutional access only. So we're trying to broaden the scope and make available to the investors more IPOs and secondary market transactions. So there's a whole array of benefits we're looking to deploy out, and we couldn't do that just as a CSE alone, and hence why we've got partnered with Eric with Tetra, because they are certainly a big piece of the puzzle in terms of moving forward with the security tokenization project.
It's pretty exciting stuff. Okay, so I just want to break down for those of you where maybe that might have gone over your head. We're going to break it down as simply as possible. So what we're working on essentially is an issuer on the CSE can go and do a capital raise just like they normally do. And instead of issuing what would typically be a common share, it is a digital common share. Is that right?
That is exactly right. We're trying to find that fine balancing act between staying within the existing framework of securities legislation in Canada and then introducing new innovation. And that's been one of the biggest challenges so far, of making sure we operate. We don't want to introduce too much change to the marketplace, both from a regulatory perspective and then also the way that these tokens are going to be traded and transacted. So what we're attempting to do is layering in benefits over time. And our mantra so far has been to be as least disruptive to the marketplace as possible. So as we look to launch and deploy and then further enhance throughout the next three years, our day one offering will be as close to an equity offering as possible, just to make sure people understand and people get used to the new process. Over time, we'll start layering in the benefits of security tokens and the full sort of power of the tokens.
And of course, these securitized tokens are all going to be, on a blockchain platform, which will allow various things to be included in it and proof of concept there, right?
Correct. And that's where, I think where a lot of the innovation we're really going to be able to enjoy, and people realize that when we start looking at digital tokens on a blockchain, the ability to embed a smart contract by way of prospectus, by way of certain rules and regulations to make sure the security surrounding those security tokens is absolutely buttoned up. These are some of the real day one benefits that are going to be able to assist not only the exchange, but all the constituents, including our regulators and the dealers and the transfer agents, to understand exactly where those securities are at any given point in time and who holds them as well. So, the overall risk profile we're looking to lower substantially as well.
Eric, we're going to move to you now. So tell us firstly about Tetra Trust.
Yeah, so Tetra Trust Company is Canada's first qualified custodian for digital assets. And what that really means is Tetra has the ability to hold digital assets, both let's call them cryptocurrencies and digital securities, on behalf of its clients in trust. This is something that the Canadian market was desperately missing. Some of the only providers out there right now that provide qualified custody are either in foreign jurisdictions like the US or unqualified offerings based in Canada. Have been able to bring to market now is the first trust company that is able to offer this type of service, which really unlocks, especially on the security side, right, a lot of what was currently missing in this space, right? That is one of the missing pieces when Andrew and I were speaking about the project a few years back was really the custodian piece, and having that qualified custodian to act as that player in the ecosystem that the CSE is building. And so we're excited to work with the CSE. I'm excited to partner with the team there, and it's been a great experience.
Eric, what about you? What do you think the next thing? What is the future of all this?
Well, we're really just at the early innings here. The custodian space is the first area that sort of being tackled by the current infrastructure that's being built out in the crypto space right now. But what CSE and this joint venture really is doing is moving up the chain, right? Clearing and settlement, providing better use cases, providing issuers and investors a better opportunity to settle their trades. That's ultimately where we're going. That will provide a better ecosystem and a better way to trade. And it's leveraging blockchain technology, which is this novel, amazing, unique technology stack that really has a ton of different applications. So really, for people who are listening who think blockchain is Bitcoin, it's actually much more than that. Blockchain is different than Bitcoin. Bitcoin is the first application of using blockchain technology, but there's a lot more there. And this is just another application of blockchain technology to another industry where it can really revolutionize something. So it's a really exciting space. We're still in the build phase, early innings, but there's a ton of excitement and buzz.
Very cool stuff. Well, listen, thank you both for joining me.
Great. Thanks so much.
I have the honor of being joined today by Tom Hunter, who is a partner with Gowling WLG. Thank you for joining me, Tom. There's a lot going on around digital securities as they're coming to the capital markets. Obviously, there's digital securities as well as digital assets. And I think today what you're going to help us break down is considerations for companies as well as considerations for investors. So why don't we start off talking about how digital securities are being handled for companies?
Sure, that would be great. The interesting part of this analysis is that most jurisdictions do not have legislation yet that has been specifically drafted for the digital economy and digital assets. So a lot of jurisdictions, countries are trying to take digital assets and use the current legislative framework that didn't anticipate this type of technology. And so determining whether something is a security and subject to securities legislation or it is not a security, commonly referred to as a utility, is part of what securities lawyers and M&A lawyers are dealing with on a regular basis. From a investor or company perspective, what is important to understand is, from the investor perspective, what are you actually buying? And from a company's perspective, what are you actually selling? Is it a security governed by securities legislation, or is it not? Is it something that the market, digital economy and digital market is referring to as a utility? For most people, those words are meaningless. They don't know what a security is. They don't know what a utility is. I use an analogy. Is it a rewards card that you're buying, or is it an investment that you intend to resell at a profit? And that's a simple distinction that most people can understand. If you have a Tim Hortons rewards card and you're using it to buy coffee, you don't intend to take that card and resell it at a profit. It gives you certain rights and you intend to use those rights. However, if it's an investment, you intend to purchase it, hope that the price goes up, and then resell it. And that is really the fundamental difference between a security and a utility. And in the digital world, we've been faced with a whole host of new instruments that hadn't been in existence prior to digital assets and digital securities coming into play. You'll hear of things called a SAFE, a simple agreement for future equity, a SAFT, a simple agreement for future tokens. You'll hear the words coins and tokens used interchangeably. And what's most important for the investor is that they understand what they're buying. Is it a rewards card-like instrument that gives them certain rights? And what are those rights? And that they won't likely be reselling what they've purchased? Or is it like a security, like a stock, like a share in a company, even though it might not be called a share, it might be called a token or a coin, that they intend to purchase, hold for a period of time, and then sell at a profit? And of course, there are now exchanges that have been set up specifically for tokens. Are very much like stock exchanges, where you can purchase a token on that exchange and sell it at a later date at a profit or a loss, depending on what happens to the price of the token. So from an investor's perspective, clarity on what you're buying, what are the rights associated with it, what is your ability or not to resell it, is really fundamentally important. And that's what a securities lawyer acting for an investor will do.
I've definitely never heard it explained like that, and it makes a lot of sense to me. You mentioned that the regulatory framework wasn't necessarily created with these types of assets in mind. Do you see the regulatory framework working to adjust to this new asset class that's coming to market?
It's starting to happen. There are countries that now have specific blockchain and crypto legislation that regulates the sale and purchase and trading of these instruments, these types of assets. Liechtenstein is a country that has this legislation. There are others that do, slowly being adopted in other jurisdictions. And it is the usual case that the law is catching up to technology, and it takes time. I think it's just a matter of time before the United States, Canada, and other mature legislative environments for securities come out with legislation that is specifically designed for digital assets. But it will take time, and in the interim, they're trying to take old legislation and apply it to a technology that hasn't existed before.
I am joined, of course, by my wonderful colleague, Maruf Raza. He is with MNP. Thank you for joining me, Maruf.
Thanks, Anna. Great to be here.
Today, we're talking about digital securities in the capital markets. We have a lot of issuers at the CSE that are focused in this space. So the first question I want to ask you is, what is the auditor's role with companies focused in this space?
Companies going public or that are public, they need an auditor on record, from a regulations national instrument perspective. I think where the differences start is obviously because it is as you said, an emerging space, and it's an emerging space unlike other emerging spaces in that there is a mind shift in terms of what this is. And so for many of us, we look at this as this is now a separate asset class. And, a lot of people are trying to fit it into existing buckets. Is it like cash? Is it like an investment? Is it like something else? And so for us that are looking at it, we're saying, this is something really new, right? And yes, it has features of all of those things, but it is something new. And so we have to approach it, in that way, because if we try to fit it into the traditional box, whether that's from an audit perspective or a regulator perspective, it's going to be tough. And there are certain elements of it that we absolutely have to make sure. I mean, audit is an audit. You have to get comfortable in terms of, is the asset there? Does it exist, right? What's the valuation of the asset? So irrespective of what it is, the principles are the same. But the way in which you need to perhaps get there is going to be a little bit unique because of the sectors that we're in.
How do you evaluate a digital asset?
Yeah, and I think in short, it's difficult. On the one hand, it's in some ways there's a lot of data. So if you look at when you look at digital assets, there's a variety, right? There's your traditional, if I can call it traditional, cryptocurrencies. Then you have things like NFTs, and you have tokens, and you have all sorts of tradability in those things, and some not at all. And so when you look at like a traditional cryptocurrency, like, obviously on the one end you have Bitcoin or Ethereum, very heavily traded, lots of quoted prices, right? That you can say, oh, here's the value. And then on the other end of the spectrum, there may be no quoted value at all. And so with those, certainly on the other side of the spectrum, it's very difficult, right? Because, you're having to sit back and say, well, here's what I paid for it. And so typically what people are doing, they're looking at, is there a secondary market? And if there's a secondary market, is that market supportable? Because one of the issues, even on the when you're dealing with, like, again, traditional cryptocurrencies, the issues that we find is that those currencies may be trading at different prices on different exchanges. And so unlike, if you have a stock, you can pull up the quote of a stock and that's the quote, right? More or less. With cryptocurrencies, it's not that simple. So you have to figure out, well, not only is it an active market, like, is it trading, right? But is that the primary market? So that's great that, in a South Korean crypto exchange, you can get this price. But if you're never going to access that exchange, does it make sense for you to use that price? Should you be using the exchange that you're going to be dealing with perhaps in North America? So there's a bunch of these challenges on a valuation side. As I said, there's a dearth of information. It's not that there's a lack of information out there. It's now a question of being able to bring it all together to present to an investor or a stakeholder in a meaningful way. Where the challenge with this emerging sector lies is that the custodians that are coming into play here are also relatively new entities. So the controls and processes that, a more mature industry or a mature company would have are still being developed. Now they're getting there. If you see the pace of change between 3 years ago and now, there's a whole bunch of stuff that happened. So if you look at, again, using the mutual fund industry as an example, when an auditor or an investor is looking at a mutual fund company, they know that there's a service organization behind them, a custodian. You talk to the custodian says, yep, and they give you these reports. So we call them these SOC 1, SOC 2 reports, which basically says the controls in my organization are working. So you're good. And in many cases, those are publicly available. Whereas not here, there's a lot of companies that are coming up with these SOC 1, SOC 2 reports, but we're still a far ways away from it being a universal thing that exists. So if you're an investor, those are the types of questions that you can ask to the issuer, to the management teams, to understand what's happening behind the scenes that's not always self-evident from a financial statement.
I'm joined today by a special partner and colleague, Mert Guler. He is with Purves Redmond, an insurance provider. Thank you so much for joining me, Mert.
Thanks a lot, Anna.
Okay, so we're going to talk about digital securities. I think this is an emerging sector that we're starting to see. We're seeing it at the exchange. I know that you guys are seeing it in the insurance world. So we're going to dive into where you guys fit in that. Can you just start off by telling us about Purves Redmond?
Sure, Anna, thanks. Purves Redmond's an insurance brokerage. We're a boutique and we just focus and specialize on high risk sectors and industries like cannabis, digital assets, biotech and psychedelics, and other sectors.
Fantastic. So you're really there on the forefront of these emerging spaces that are coming to market.
Yes, and that's also why we're really good friends with the CSE and all of you.
Absolutely. And we are good friends. And we're so excited to have you partner up with us on this. Okay, let's dive right into it. Where would digital securities, well, I would assume that digital securities would require a lot of insurance. There's a lot of risk associated with that. Where do you guys fit into the digital security space?
Yeah, thanks, Anna. Well, our job is to help protect executives, help protect balance sheets, and even help with corporate development. And by corporate development, I mean in terms of when you're looking for independent directors, they will probably want you to have insurance, directors and officers insurance. And we also help with some sort of consulting and risk advice in terms of risk mitigation and governance. But that's at a very high level. That's what we do for all of our clients, including in this sector. And all the different sectors that we're involved in are different and have different nuances. So part of our job is to be familiar with what makes digital assets a little bit different and to react to that with the insurance companies.
Absolutely. And when would a company, the director assurance is obviously super important for any company, especially a public company. I know that there's a lot of value added for directors that take that on in companies. When would a company in the digital security space, kind of get to a place where insurance would help them, when they're private or, when they go public, or both?
Anytime, but usually we get called. Like the reality is we get called when a company is thinking about going public or thinking about a large fundraising or a large Series A or B financing, when they're making representations and commitments to different investors and then they want to protect themselves. And that's usually when they'll call us. It's directors and officers is not the only risk, because we also have a lot of private and public companies that are involved there. There's software developers or smart contract auditors or involved in this sector. If you have customers or data in this sector, then there are probably some risks you should at least talk about and think about, walk through them. And you may or may not purchase the insurance at the end of the day, but that's when it's worth having a conversation about risk.
And is there anything unique about the digital security space or digital asset space when you're working with your clients?
What we've done is develop a really strong global network with the best minds in insurance throughout the world that are passionate about this sector, just like everyone in the conference and seminar that are passionate, that are interested in learning about it. People who understand the sector far better than I do. And there are insurers in Bermuda or in different parts of Europe and in the US that do understand this sector, that are willing to provide insurance for directors and officers and other risks, including even a hot and cold storage. We're even working on solutions for some really unique risks in that sector.
Super interesting. Well, Mert, thank you so much for joining us and partnering up on this. I think that we're going to continue to see the space grow further and further. And of course, all of the partners involved in this and how they're going to help this come to market is obviously necessary. So thank you for everything that you do, Mert, and thank you for joining us.
It's awesome to be part of this seminar. Thanks.
The honor of being joined today by Peter Wall, who is CEO of Argo Blockchain. It is a company listed on the London Stock Exchange. Thank you for joining me, Peter.
Thanks for having me, Anna. Great to be here.
It is. And so you live in Ottawa, but you're currently in Victoria and you're listed in London. So you're all over the place.
And we have operations in the United States. We're building out a big facility in Texas. So yeah, we're across 3 different countries.
Well, why don't we start off? Tell me about Argo Blockchain. What is Argo Blockchain?
Sure. Essentially, generate revenue by minting fresh Bitcoin, by mining fresh Bitcoin. And the way we do that is we verify transactions on the blockchain using a fleet of mining machines, cryptocurrency mining machines. Mostly we mine Bitcoin. And we have 21,000 mining machines across 6 different facilities in Canada and the US. And our Bitcoin mining capacity, for people who are, technologically savvy about this, is about 1,000 petahash or 1 exahash, which is about, between 0.5 and 1% of the overall Bitcoin mining capacity on the network. Kind of a defining feature is that we're an ESG friendly miner. So we are currently 100% climate positive or carbon neutral and beyond. And that's been a big part of what we've done since we started back in 2018.
Well, and I mean, that's a big part of why we're having this conversation today. There's so much that I'd love to get into with you, but we're really going to focus on the sustainability. So I think there was a pinnacle moment for those that maybe don't know the sector as well, when Elon Musk came out and decided to accept Bitcoin for Tesla. And then very shortly after came out and said, well, apparently it's not very good for the environment. I think this was a shock to some people. I've heard quotes before that it's the amount that it takes to mine Bitcoin is the same as used in small countries. Is that accurate?
I mean, there's certainly part of the feature, and you can debate whether it's a feature or a bug, but part of the feature of mining Bitcoin is that it uses power, and that power is what gives the verification to the network. It's hard to do, and so they call it the proof of work consensus mechanism. And in order to solve a Bitcoin transaction, you need these specialized computers, and these specialized computers use a lot of power. So we're, for instance, in Texas, we're building out a 200 megawatt facility. 200 megawatts is about the same amount of power, to use a Canadian reference, that the town of Kingston uses. So it uses a significant amount of power. And I don't have an issue with using power to mine Bitcoin. The issue, I think, that that Elon highlighted, and the issue that I think lots of other people have, is where's that power coming from, and what's the carbon emissions that are associated with that power. And so at Argo, we've tried to, since our inception, we've really tried to limit our emissions, and that's by locating ourselves in places where we're using renewable power. So we started mining in Quebec. It's obviously 100% renewable. We're building out in Texas, where the grid down there is over the part of the grid where we're patching into is generated by over 90% of the power coming into the substation that we're tapping into is 90% from wind. There's a ton of wind power, a little bit of solar that's coming online as well.
And do you think that the whole sector will move in that direction? Do you think there's a lot of work that still needs to be done there?
Well, the sector is moving in that direction. I don't think it's a question of whether it's happening. Its question is how quickly is crypto mining going to get to 100% renewables? It's certainly the trend, and we've been ahead of the trend. But there's lots of companies that were considering traditional power sources, non-renewable sources before, that are now leaning heavily into renewables. The other big thing that's happened recently is there was a shutdown of mining operations in China, where the government came out and said, we're not going to allow Bitcoin mining here anymore. And so a number of the vast majority of Chinese miners have left China, and because essentially it's not a stable location to mine anymore. And a lot of those miners were using, at least during certain times of the year, we're using coal power to mine Bitcoin. And so Bitcoin, just by China banning it, Bitcoin became a lot cleaner. So the estimate is now well over 50% of the Bitcoin that's being mined is being powered by renewable power.
Wow. And are these facilities, do you think that at some point there'll be some kind of overarching requirement of how it's being done globally? Or are the requirements of how efficient they are, carbon neutral they are those defined country by country?
It's not even country by country, and I think it's more jurisdiction by jurisdiction. So you've got places in the United States that have said welcome to all Bitcoin miners. Texas being one of them. It's a very business friendly jurisdiction. Famously, there's lots of renewable power. The power is cheap, and there's opportunities to get power costs really low by participating in certain kind of programs there. And then there's other parts. There's a community in Montana that has said, we're only going to allow, Bitcoin mining under certain conditions. There's been some pushback in upstate New York with a miner that was mining up there, and those are all been very localized. So it's really kind of almost county by county, municipality by municipality. And I don't see kind of coming down the way any large, national legislation that's going to say, you can mine this way or can mine that way. It's certainly not in the short term. And then that's the same globally. I mean, part of the exciting thing about cryptocurrency and the exciting thing about Bitcoin is that it's decentralized by design, by its very nature. And so, we can have a situation like happened a few months ago where China banned Bitcoin mining, and it just, all of that hash power is now, migrating to other parts of the world and popping up in other parts of the world.
And do you think that do you think some of the reason that it kind of went the way that it did is because it affects the margins on the mining process, or just because it just got so big?
I think it's a bit of both. I mean, I think, renewable power is now, if you go back 5 or 10 years, renewable power was, pretty much more expensive. You had to use subsidies. It was harder to tap into. But nowadays, in places like Texas, certainly our expectation is that the power we're going to be getting from renewables is as cheap or cheaper than traditional power. So I think there's an automatic kind of incentive for miners to go to the lowest cost of power, because for us, 85% of our operating costs are power costs. That's where, our staff costs are a rounding error compared to how much we pay in power. So it's really important, the difference between 5-cent power and 2-cent power, it really affects our bottom line. And then at the same time, there is this narrative, out, you mentioned it right at the start, there's a narrative out there that Bitcoin uses a lot of power and that it's, contributes to greenhouse gas emissions, et cetera, et cetera. So I think there's also miners, especially companies that are publicly traded, that want to be, seen favorably and are doing it to kind of help improve their image in the eyes of the public. We're doing it because we think it's the right thing to do, and it makes good business sense. And we've done it even before. We've gone back to 2018. We've been mining with renewable power, so it's not just because this person or that person might have said earlier this year that Bitcoin needed to be cleaner.
Yeah, absolutely. I mean, I think too, we're in a time right now, and I see this change in the generation of retail investor coming to the market, and they demand very different things than what was demanded before us. And a big part of that is ESG requirements. And I think investors, they have the opportunity right now to be incredibly picky, with who they invest in. And they want the companies that they're investing their money in to have good practices. My last question for you, and just curious what your thoughts are, you can touch on sustainability or whatever arena of the sector you like. What do you think the future of cryptocurrency is, and mining and digital securities? What do you think is going to happen?
Before I answer that, I do love your take on retail. I do think retail investors are a force right now. We've certainly, our company is primarily held by retail. We've tried to engage with retail in as many ways as we can and be transparent and be open, and it's cool. It's cool because it's really shaking up the industry, and exchanges like yourselves are kind of tapping into that world as well. So I think it's pretty exciting. Where do I think crypto is going? I think crypto, like we've been talking about, is getting cleaner, is getting more efficient, is, certainly on the mining side. And we're very excited about, this facility we're building in Texas and some of the technology we're using in that facility, the immersion technologies. That's all very exciting. But in terms of broader strokes, I've been thinking, and I don't know how old you are, but I'm in my 40s now, and I've been thinking a lot lately about when the internet first came out and how disruptive it was to information, and how we started using email and the web, and all of a sudden the information superhighway was here, and then 10 years later, Internet 2.0 kind of hit us, and it was all about e-commerce and communications and how the kind of decentralized impact of those forces had on our lives. And now, we order things off of Amazon and we go on social media, and those have transformed and incredibly disrupted traditional industries. I think the next big move, and I think Bitcoin is the first kind of step in that direction, it's the email of Web 3.0. And Web 3.0 is the internet of value. And it's taking the world of money and finance and putting it online, putting it on the internet in a decentralized way. And, Bitcoin's a start. It's just the start, and it's an important start, and it's a great tool. It's gold 2.0. But coming behind it, we have all of this, decentralized financial technology that's coming. And I'm excited about that transformation and how, our kids are going to use NFTs and use DeFi lending and borrowing and insurance and all of this incredible innovation that fintech is kind of has tried to do in the last 10 years, but they were so restricted by the traditional banking system and the traditional financial system. There's going to be a wave, in 5 to 10 years from now, which is just going to crash over all of us. And I'm excited about that.
Well, thank you so much, Peter. For all of you watching, make sure you go and check out Argo Blockchain. You guys have an amazing team with you, and you've done some neat stuff. So I'll keep watching you myself. Thank you so much, Peter. I hope you join us again.
Thanks, Anna.
Hi there, my name is Mark Nicholson. I'm with Blockchain Foundry. We started out as a blockchain protocol development company back in 2013. Through popular demand, we created a for-profit, publicly traded consulting company originally. In 2016, started delivering client work in 2017, 2018. Over the last 3 years, we've delivered over 65, 75 successful projects. And most recently, we went out and raised some additional capital so that we could develop product and take products to market. Today's an exciting day for us because we announced our first product. We released the website today, and we're excited to release our pre-transaction compliance solution we call Peregrine. You can find more information at www.getperegrine.com. And essentially what it does is it allows for projects to mimic money transmission and securities rules before a transaction takes place with crypto assets, which until most recently was not possible. And so what we're trying to do is stay in line with securities regulators and money transmissions regulators and provide them the tools that they need in order to make sure that our industry can thrive and continue forward in a regulated capacity while still maintaining permissionless, decentralized infrastructure. We've got other products coming to market in the near term, one of which is a digital wallet that's going to support our compliance solution as well as NFTs. And we've got some exciting NFT releases coming over the next few months as well.
Hi, I'm Ben Gelfand. Welcome to Bluesky Digital Assets. I'm going to take you through the company very quickly. We've been in digital mining for about 4 years, and the reason we're doing it is because it's very profitable. For example, in our latest quarter, we reported revenues of $320,000 thereabouts, with expenses of only $65,000. You don't see margins like that in other businesses, and we're very excited about it. We're looking forwards to a 2 or 3-fold increase in our mining productivity, and we've got some very exciting developments coming out on the software side, which will differentiate our company from just a mining company and becoming an integrated blockchain company. We feel that having this two-pronged approach will revalue the company and get us a better share price and more interest from shareholders out there. We focus a lot on Ethereum, and we have, in terms of ESG, we have a very low carbon footprint in that we use mainly hydroelectric power. So we hope that keeps people on the green side happy. We're looking forward to doing further presentations and expounding on this presentation, and I'll wrap it up there. Thank you.
Hi, I'm Daniel Cawrey. I'm Chief Operating Officer of Cypherpunk Holdings. We trade on the Canadian Securities Exchange under the symbol HODL, that's HODL. HODL is a term that's used in the cryptocurrency world because of the volatile markets that exist. And it's the idea that long-term holding of cryptocurrency will benefit investors in the future. What we do is we offer access to the cryptocurrency world through our stock. We hold Bitcoin, we hold some Ether, we hold some equity investments. We also have a privacy thesis. So we pay attention to anything that is backed by cryptography, including cryptocurrencies. So that's concepts like IP addresses, which we own and then lease out for VPNs. We also own some wallet technologies in terms of equity stakes. So we have Wasabi Wallet, which is a privacy wallet. We have Samurai Wallet, which is a privacy-focused mobile wallet. And we have Engrave, which is a hardware wallet. At Cypherpunk, we believe that cryptocurrency in the privacy tech world is still in the first inning. A lot of people look at Bitcoin and Ether and think that it's really expensive. Well, we offer access to this industry, and we have knowledge of this industry beyond what many investors do. So we offer access to these technologies. We offer upside to these technologies while we manage the risk and hedge out some of the volatility that exists in the industry. I've been involved in this for over 8 years. I've written a book called Mastering Blockchain through O'Reilly Media. And I've worked for CoinDesk, which is like the tech crunch of cryptocurrency. And I believe that, again, that this is like the first inning of the cryptocurrency world. And in the privacy tech world, we're going to see these technologies become more valuable over time. The crypto markets become more valuable over time. And also people are going to be more interested in privacy and using cryptography, which is already used to secure communications, which is used to secure things like Bitcoin, and can be used to secure a lot of other data assets that people just don't think about. Social media today is all about people giving their information to certain platforms and then those platforms monetizing it. Well, I think there's going to be a time that people are going to realize that their privacy is more valuable, and that's what we're investing in. So that's HODL on the Canadian Securities Exchange. Thanks.
My name is Brad Moore. I am the CEO of Global Cannabis Applications Corp. We trade on the CSE under the ticker symbol APP. So what Global Cannabis Applications Corp is we functionally are what we like to say, we're a blockchain company with a cannabis problem. We're actually here to try to use advanced technologies using blockchain, algorithms, mobile technology, and to truly understand what's happening in medical cannabis, to determine what products are best for what treatments are required, and to produce a better outcome for medical cannabis patients. When I say we're a blockchain company, really what I'm saying is we use the construct of truthfulness and transparency to collect, aggregate data that can then be analyzed, and to use that data to determine the best treatment possible. This is not something that's been done in any type of medical field in many ways, let alone in cannabis. Cannabis is a unique opportunity because we're dealing with a plant, and only blockchain can do that. And we have a patent pending unique system, what we call seed to seed. So well beyond seed to sale, we track all the information back, and that's where the efficacy comes from.
Hi, I'm Jana. I'm the sales and marketing strategist here at NetCents. So I'm just here today to give you a bit of information about NetCents and what's going on in the company right now. So NetCents has been in the cryptocurrency space since 2017. That's when we decided to make the pivot and focus solely on cryptocurrency. Basically, we saw where the market was going. We knew how exciting this opportunity was, and we really wanted to take advantage of it. So there's a couple of different areas that NetCents focuses on. We have our merchant gateway, we also have a user exchange, and we have a partner program. So we've really got you covered, basically, no matter what part of cryptocurrency you're focused on. So I would definitely say our main focus to this date has been the merchant gateway. So on the NetCents merchant gateway, we help businesses accept cryptocurrency payments. So whether you're a large company or a small business, you can work with us to take cryptocurrency payments from your customers. We have invoicing, e-commerce plugins. We make it super simple. And we're actually one of the only companies in this space. We were definitely one of the first companies in this space. And I believe we might be one of the only public companies. So it's definitely a unique opportunity. And I would say right now, although businesses are definitely getting more and more interested in cryptocurrency, it's still something that's quite new and novel to most people. So NetCents is definitely a company that's taking advantage of this opportunity that we saw early on, and we're connecting with these different groups of people to get them interested in cryptocurrency. I mean, from here, the sky's really the limit. We're getting into DeFi, we're getting into other areas as well, and it's going to be definitely some exciting years ahead for NetCents.
Well, that marks the first half of today's program. Obviously, a great overview of what's happening in the digital security space, happening in real time, right in front of our eyes, all these evolutions, from banking to regulation to what the exchange is doing. But Anna, tee us up for the second half. There's some more topical things that we're going to discuss here, and I'm really interested to see what we have coming up.
We're getting into some really fun topics now. There was a lot of education in the past one. You might have to rewatch it if you wanted to catch it all. But the next one, we're getting into some fun topics. We're going to talk about sustainability. There's obviously a lot of search for sustainability because it's a very energy consuming process, mining for cryptocurrencies. Talk about sustainability. We're going to talk everything banking. Obviously, this is infiltrating everything we do in the banking world, and it is coming. So we have the opportunity to dive into that. And we're going to end off with arts and entertainment. There's a huge movement of arts and entertainment coming to digital assets. I'm sure you've heard the word NFT before, non-fungible token. We break down everything NFT and all the stuff that's coming to market.
All right, don't let us get in the way of you getting smarter. Here's the next portion of digital securities in the capital markets.
I have the honor of being joined today by John Matonis. He is Chief Economist with Cypherpunk Holdings, which is a CSE issuer. Thank you so much for joining us today.
Oh, no problem, man. I'm glad to be here.
Okay, so John, let's jump right into it. First of all, I'd love for you to tell us a little bit about your background. You have quite an interesting background. We're obviously here to have a discussion around finance and banking in digital securities and digital assets and what's coming to market. But first of all, why don't you tell us a little bit about you?
Right. I early on in my career, I was the foreign exchange trader for Visa International, and going back to the 90s. So as the chief foreign exchange dealer for Visa, we covered about 18 billion in international currency trade at that time. So anytime a transaction was made, an exchange rate would hit your statement. That was our team that was putting that exchange rate in. So that gave me a glimpse into the international payment system and how all that worked with various currencies and cards and payment instruments, which was also about the same time that the world was moving into cryptography, because Visa then became one of the early investors into VeriSign. And I moved over from Visa going into VeriSign in the payments division with digital certificates and encryption. So the whole financial cryptography area was booming in the mid to late 90s. And this is all, pre-Bitcoin, pre-cryptocurrency. In fact, the institutions back then were looking at ways to get into the market for being their own currency issuers. So you had a group at Visa that was examining how they could be a digital currency issuer by creating a Visa monetary unit even. So they were in a way forecasting a lot of the things that we were to see later on. But it was that blend of finance and cryptography that was so interesting to me, that was booming at the time, and eventually just led me into be involved with digital currencies going all the way from the mid 90s to when Bitcoin was created in 2008, released in 2009. I wrote extensively on Bitcoin. I wrote for Forbes, I wrote for CoinDesk, and I eventually joined the Bitcoin Foundation as a founding member in 2012. So I was the person behind the Bitcoin conferences that we had in 2013 and 2014. We had the biggest Bitcoin conference in the world at that time in Amsterdam in 2014. The Bitcoin Foundation today is not so much of a driving force in Bitcoin because so many other companies have taken up the task of dedicating money, dedicating developers, and dedicating promotion. But back in the early days, there was nobody that was even forming a narrative for the press. So we wanted to fill that vacuum and not let the press deviate into bad press for Bitcoin. And we were successful in doing that. That takes us to about 2015, 2016, where I, at that point, started working with various companies as a board director that were in the crypto space. So focusing on, fintech, payments, gaming companies, but also privacy tech and the intersection of privacy tech with finance. Which led me to Cypherpunk Holdings, the current listed company. The reason that Cypherpunk Holdings and privacy tech is so interesting in this space is that you won't have any success with cryptocurrencies or DeFi or NFTs or any of those things unless you have a solid foundation of privacy. You're not going to have any businesses adopt things where where payrolls will be public information, or you won't have any large finance deals happening if the sensitive information is not confidential. So there's a whole entire sub-industry working to solve the privacy problem with these startups, and that's what Cypherpunk Holdings focuses on.
I saw you do an interview and I thought you said something that was really interesting. You said, money doesn't do bad things, bad people do bad things. And I think that's a really interesting way to view it. I think people are afraid of privacy around currency, but you did dive into that a little bit. Can you tell us a little bit more about that?
Yeah, I think you're right. I think that government and media use the opportunity to tarnish what they want to tarnish. But if you strip it down to its essence, it's really nothing different than what we already have. So the paper cash in your pocket has the same privacy attributes that something like Bitcoin or Ethereum would have. And mainly those three privacy attributes are, user-defined privacy. You get to decide if you reveal information. The second attribute is the irreversibility of the transaction. If you give someone a $100 bill, they have it and you no longer have it. It's irreversible. And then the third attribute is the non-traceability. You're not able to link a cash transaction to an individual in all cases as that paper cash moves along the transaction chain. So when we move to the digital world with something like Bitcoin, it doesn't add any new hidden secret privacy techniques. It's just the same ones that we already had in the analog world with paper cash, which I don't think that certain powers that be want those same attributes to remain in paper cash. So then they become concerned that those attributes are actually able to be retained when we go digital. This really wasn't a focus of Visa so much, but it's a focus of decentralized systems such as Bitcoin on the internet.
The original dollar was an IOU, essentially. That's how paper money was created. We had obviously coins that were made out of certain metals, but the original paper money was IOUs, and now we live in this digital world. So it seems to make sense that we're entering that side of it. Can you just tell us a little bit about some of the themes that you're seeing in finance and banking when it comes to digital securities or digital assets? I mean, we can talk about cryptocurrencies, but just in general, what themes are you seeing? What are you seeing come to market in the banking world?
Well, there's so many new business models that are made possible by this technology. So it ultimately will affect every single area. We're seeing it go with the low-hanging fruit initially. Low-hanging fruit being obviously financial services in the larger sector, but focusing in further within financial services, it's the early applications of around DeFi and decentralized finance, such as lending and earning. These are normal banking functions, but when you throw it into the world of DeFi, it automatically sometimes takes on this, this new glamour. because people aren't used to it without having a physical bank or an old institution. So staking your digital assets refers to earning a yield on your current holdings. So it's just like earning interest that you would earn interest on a CD. You want to earn a yield. There's many products that are evolving around that, and the entire yield farming market is something that's new to a lot of people still, but it's exploding in DeFi land. Then on the other side of it, you have the lending business. People want to be able to use their collateral for fiat loans. For instance, let's say that you have a Bitcoin or Ethereum portfolio. You don't want to liquidate your portfolio, but you want to use it as collateral to get a loan in dollars or euros so that maybe you can make a down payment on a house or something like that. And there's a multitude of companies that are springing up to be able to do that and address that market. It's moving so fast and so quickly that the regulators, not only can they not keep up with it, but they can barely even understand it.
Do you think that the financial institutions are resistant to this change?
Largely I do, but I don't think it's their fault. I think the financial institutions are resistant to the change because right now they've been deputized to be almost a law enforcement wing for financial surveillance. So their agenda is very conflicted. If you go into any major bank right now and try to discuss anything about new product offerings or the future of finance, what you'll run into is not open-minded product people, but you'll run into a wall of attorneys. I mean, the compliance team and the legal teams outnumber the new product teams by a wide margin in banking. So I don't think it's their fault because they've been deputized in this way and they've been chartered and regulated. But I do think that there's a certain number of financial institution players that are looking at the space, and they're looking at the space for acquisitions.
Do you think
and that's how they'll enter the market?
Do you think that we're going to start seeing this in all of our daily banking? I mean, for example, do you think at some point you could go to your brokerage account, deposit Bitcoin, and buy stock?
Well, it's funny you should say that. I think one of the brokers just announced that they're accepting cryptocurrency deposits. That was last month. So
wow.
We might start seeing that sooner than you think. But absolutely, the answer is yes. And I think it's going to be driven by the wallets. And Cypherpunk Holdings has the thesis that it will be driven by the wallets, which means just like the browsers steered our entry into the web and how we navigated the web, the digital wallets that people have, whether it's on their phone or their desktop, it won't be like a normal wallet. It'll do so many things for you behind the scenes that you won't even realize. That user interface is what's going to allow this technology to go mainstream because it's going to simplify it for the end user. For instance, some of the things that you'll be able to do with your digital wallet you'll be able to construct complex smart contracts in DeFi by just plugging your wallet into the web. You'll be able to have privacy on transactions that you define, which will all be managed by your wallet. The wallets will be able to talk to each other, but everything will still be under your control. So just think of it as we're moving from browser-based land to wallet-based land to access these services.
It's so interesting. Now, my final question for you, and this is a bit of a big one. Hopefully, I'm not overwhelming you with an answer. But how? I mean, obviously, we know Ethereum and and Bitcoin. Obviously, people can create cryptocurrencies. They have the ability to do so. We also have crypto exchanges that are coming to market where people can trade these. If we're implementing this into our everyday banking life with lending, with investing, with financing, how is it being dealt with as far as, going back to kind of regular currency exchanges? How are we evaluating these cryptocurrencies as they're coming to market and implementing them into our everyday financial life?
Okay, excellent question. I mean, I've never really said that Bitcoin or cryptocurrencies is going to totally eradicate the government fiat currencies. It's not a situation where you'll immediately see a replacement like that. I think what you'll see is the Bitcoin keeping the fiat currencies competitive, keeping them honest. So it'll just be another point of competition for fiat currencies. And I also don't think you have to be overwhelmed by 5,000 different cryptocurrencies, because there's only going to be a handful, maybe 2 or 3, that function as a pure store of value, which would be a currency that people want to hold on to for a store of value to use later. A lot of the other currencies are application specific. They give you access to certain smart contract platforms, different blockchains. So we're not getting into a world of 5,000 different stores of value. There'll be a small number of competitors. Think of it like how we settled around Celsius and Fahrenheit and Kelvin for measuring temperature. I mean, we only have 3 different ways to measure temperature. We're not going to have 1,000 ways to measure value.
Super interesting. Well, listen, John, everything that you said today, I found super interesting. I hope I can bring you back at some point to do another interview. Definitely take a look at Cypherpunk. It's definitely, I think it stands out a little bit in the market, just the fact that you focus so much on privacy, which is an important element of it. Thank you for your time today, and look forward to chatting with you again.
Thanks, Anna.
I am lucky to be joined today by Mr. Cameron Schell. He is the executive chairman of CurrencyWorks. And thank you so much for joining me, Cameron.
Thank you so much. It's a real honor to be here.
First of all, tell us about CurrencyWorks.
CurrencyWorks is an enterprise blockchain. And so what that means is that, if you think about a blockchain like an Ethereum or a Polygon or any number of the other ones that are out there, Flow from Dapper, we have all those same capabilities, except that we do not open up our network to a developer community, meaning that we do all the development ourselves. And the primary reason that we do that is our target customers are Fortune 5,000 companies that are really looking to develop on a platform where they can have a level of influence and control and compliance and governance that is surpassed or greater than a particular network that has a large developer community out there as well.
Tell us about yourself.
So probably easiest to characterize me as a serial entrepreneur. I've been doing this since I was 14 years old in tech. And, started by building, computers in my basement and then the garage and then in the basement of a stationery store for the local town that I lived close to. And I've just, kind of built from there, kind of first public tech company was a digital X-ray system in the 90s. First company I got to be CEO of was a company called FutureLink. And FutureLink was, as it turns out, the first cloud computing company. Now, we didn't call it cloud computing back then. We called it application service provider. We were the first company to take applications, which included Microsoft Office and Great Plains, which is now Microsoft Dynamics accounting system, and house it on servers so that accountants and auditors didn't have to carry around back then transportables, which were computers that looked like sewing machines, to their clients' offices. And that was really the beginning of the cloud computing industry. Since then, we've had other successes and not successes too. We've had some pretty good blow ups as well. But for the most part, we've got a very fortunate track record. We've done everything from put cameras on the outside of the International Space Station to build some of the biggest payment gaming systems in the world, to the oldest drone manufacturer and solution provider in the world, which is also listed on the CSE and the NASDAQ, and of course, an enterprise blockchain, which is just limitless in its potential.
Now let's get into some of the stuff that CurrencyWorks is working on. I know you have a few different projects on the go. Specifically, what I want to talk about is you have a feature-length film that you've just partnered up with a company on. It is starring none other than Anthony Hopkins, one of the greats out there in Hollywood. And this is being offered as an NFT. So talk to us about NFT. What does NFT mean?
So a non-fungible token is a digital asset, a piece of digital content that resides on the blockchain. And when it resides on the blockchain, that means that you can create scarcity, you can create provenance, you can create ownership around it. Now, the challenge with digital assets in the past, call it a piece of music or a piece of art or anything digitized, is that it's very easy to copy. So the advantage is it's very easy to copy. The disadvantage is, of course, is that it's very easy to copy and can't hold value because it can be ripped or shared or at will. Now, when you put it on the blockchain, however, you now can put a limited number around it. You can put, again, provenance and ownership around it. So now when you take something like a song or a piece of art or a movie, and I say, we're going to release 10,000 copies and only 10,000 people can buy it, now it has scarcity. Now it can become a collectible. And so that dynamic has completely changed the digital world. And we're seeing that revolution, unfold. We see companies like Dapper Labs who have created, trading cards, right? A fantastic Canadian-based company, creating trading cards with the NBA, which are really video snippets, right? They've traded close to $1 billion worth of these cards and had primary sales in the hundreds and hundreds of millions of dollars. The company itself is now worth $7.6 billion. And it is really just the beginning of what will happen with NFT. NFTs will represent ownership, NFTs will represent ticket sales, NFTs will be lottery tickets, because it's something digital that now can have provenance and ownership around it. And that's really the revolution that's happening with NFTs. And so what we have built, the platform is called Vuele, VUELE.io, and it is the only feature film NFT platform available. And we're able to build it because we own, manage, and control our own enterprise blockchain. So we have features in there that will allow this to happen. So even if you go to the other big NFT marketplaces out there, OpenSea or Rarible or such, they don't have the technical underpinnings, the architecture to be able to do a full feature-length film. And so this is a real distinct advantage that we've been able to build into our blockchain. So when you buy an NFT, you now own that NFT, as opposed to on Netflix, where you're buying a monthly subscription and you've got thousands of movies to pick from. Now it's two very different markets. One doesn't take away from the other at all. And how we view, and certainly how Enderby Entertainment and Anthony Hopkins' crew and everybody else who elected to premiere their movie this way view this, is that this is the way they can get their significant or their super fans in to premiere the movie first. So there will be literally 25,000 copies of this sold with different varying levels of uniqueness and specificity that will sell at different prices. But that's it. And these copies will never be seen in theaters. These copies will never be streamed. They have outtakes of the movie. They have interviews with the actors and the cast. They even actually have other movies included in them that had different actors involved when it was first being shot. And in fact, in 11 of the movies, there's actually a cameo that people can participate in. One of those cameos will be in the theater release as well. So you'll be in a movie with Anthony Hopkins. So it's really an entirely new way to engage the fan, engage the customer, and allow Hollywood to launch new movies and then go to theater and then go to streaming.
I have 3 CSE issuers who are joining me today. It's very exciting. We're going to break down arts and entertainment, how they're explosively making their way into the digital asset reality that we're experiencing. I have John Dwyer, who is CEO of Wonder Gaming, Eric Ashton, who is head of ecosystems with Covalent, and Matt Bailey, CEO of Game On. Thank you so much for joining me, gentlemen.
Thank you.
No worries.
Thank you for having us.
Okay, so I think the first thing that we should break down is kind of who you guys are and the companies that you're with. And then we're going to start diving into a bunch of different things that are coming to market. So John, why don't we start with you? Tell us about Wonder Gaming.
So Wonder Gaming is an entertainment company. Fundamentally, we believe that video game and video game culture is a real critical piece at the intersection of modern conventional sports as well as music. And so to access this demographic of fans that are constantly starved for more content and wanting to engage more with their favorite athletes, their favorite gamers, and their favorite musicians via the minting and sale and campaign around NFTs and our loyalty and rewards platform, we engage with the Gen Z, millennial, and beyond audience that are looking for a meaningful engagement with, again, players and gamers and musicians that really play a real pivotal role in their life. And so we see NFTs as a very unique way to allow them to have greater access to memorabilia, special moments, and also have the bands, the teams, and the gamers find a new utility in the marketplace that creates retention and brand loyalty.
Super interesting. Eric, what about you? Tell us about Covalent.
Yeah, so thank you. So Covalent is a data middleware provider. So we provide not just crypto data, but NFT data. So some of the largest marketplaces in the world use us for all of their on-chain transactions to see what's happening with their NFTs, who's buying them, where they're going, how they're appreciating in value. I believe that NFTs have a vital role to play in the future of entertainment, the future of gaming. You're already seeing some projects doing, from it used to be pay to play, and now it's play to earn. So just by playing games, you're earning money, which is just unbelievable and crazy. You're seeing that with certain things, and we're the ones who are tracking all the data and are letting people take this data and create all sorts of things with this. So dashboards, charts, wallets, all sorts of things. It's a really exciting place to be in. So we're coming at it very much from the data perspective, and seeing what people are doing with the data and having a very good bird's eye view of what's going on in this space, not just for NFTs within gaming, but as a whole.
Wonderful. Matt, you are next. Tell us about Game On.
Yeah, so at Game On, we're solving a problem that media and entertainment has right now, is that viewership numbers are dwindling, especially for younger audiences like millennials. So we're working with the content owner like sports teams, leagues, TV networks, OTT platforms, to help make their content more engaging, social, and monetizable through gamification. And one of our products is an NFT prediction game where we're using that asset to give it a utility in games, not just minting and selling on a marketplace. So that's what we do at Game On.
Very cool. Okay, John, I'm going to ask you this one. Can you break down what an NFT is, first of all, and maybe describe to us a little bit the functionality around it?
Sure. I think there's a number of ways that you can describe essentially what an NFT is. And when we go into a room where folks are, kind of view it with a little bit of a jaundiced eye, because there's a lot of sensationalism around NFTs. It's inherently linked to crypto, which some folks really haven't gotten over the comfortability line with. But the easiest way for people that are, for instance, sports fans can think of an NFT is it's a digitized version of your Wayne Gretzky rookie card, for instance. So what it is essentially functioning as an alternative asset class that's hosted on the digital world. And the unique and perhaps most important component of it is that you have this ability to understand ownership, or as we call it, provenance, and where from the moment that it was minted and the platform upon which it was sold to the people that purchase it, we're physically tracking it using blockchain technology. And so that's really this interesting next step that we're seeing entering multiple sectors, as we're talking about here, being gaming and of course sports and music. And so it's a fascinating opportunity for people to now purchase and own these highly accretive alternative asset classes in the digital form that can be traded on Contra, can be traded for crypto, and you're now seeing companies like ours move more into the fiat component. But I think it's also important to note that it can be used as a loyalty product, and it can be used to go well beyond just replicating a physical good. You're seeing rappers such as Tory Lanez minting albums and releasing them in the form of NFT. He sold 1 million albums in 57 seconds by virtue of it being minted and sold into the marketplace as an NFT. And so that's really where we see a huge opportunity, and we see a tremendous amount of growth, because there really are no barriers that define the utility that NFTs can play in the market.
Okay, so let's go back to the playing card for a second, just for any viewers that maybe this is a new concept for them. So NFT is a non-fungible token. So the players' cards would be issued on a there would only be so many that would be issued. Is that right?
Yeah, that's correct. And so as the company or the organization that mints them, you get to determine the amount of supply. And so, you're seeing companies currently like Autograph that are, that are partnering with some of the biggest athletes on the planet. They don't really have to do a lot in the way of cultivating a really great creative content campaign and trying to tell the story about who Wayne Gretzky or who Tiger Woods or Derek Jeter are. And so, they know that they can go out to market and release a 1 of 10,000 or 1 of 5,000 at a high price point and see extreme demand in the marketplace. So they're executing in what I would describe a very bright way. And now you're going to start to see some of the second tier athletes and third tier athletes in this example coming into the marketplace. And that's where we're really going to see the rubber hit the road, because to your point, the amount of supply that's put into the marketplace is what's going to dictate the success. If you try to price it too high and you release too much product and it doesn't move, we saw this recently with the wrestler and actor John Cena releasing a series of NFTs, and they didn't sell. I mean, he's an international star. He's liked by, a ton of communities that are really endemic to viewing content digitally, but it didn't move. So the strategy on how many you make and how you market it is very, very important.
Super interesting. Okay, Eric, I'm going to jump to you because I want you to tell me about the data. What story is the data telling us when it comes to NFTs coming to the market?
So that's a great question. I think it's really interesting how it's evolved over the last several months. What you saw at the beginning, so one of the largest marketplaces in crypto, and the crypto side of it is Rarible. And I remember looking at the data, maybe it was 9 months ago, and seeing that 30% of all transactions on Rarible came from 60 people. And I was just shocked. This is all public data. And so I was like, oh, that's interesting. But then you do it again today, and that's not the case anymore. It's 30% of the revenue, 30% of the transactions coming from 6,000 people. The data is very different now than it was then. So I think you're starting to see an explosion in the amount of NFTs released. I think a lot of it has to do with just the content and the quality of the NFTs. I think the game has really changed a lot. And you're in terms of how people are thinking about it. I remember seeing NFTs in 2017, 2018. Nobody cared. They were cool. They were extensions of certain games. They had certain unique qualities to them, but there wasn't anything to get you excited or for any of these for anybody to get up in arms and start being wowed about some of these collections. But you're seeing now on the data side and on the product side is how people are mobilizing some of these things and how they're getting products to market in very innovative ways, not just as digital art or even collectibles, but as proof of. So when I say proof of, I mean, you're seeing things like, show up to this webinar and I'll give you a proof of attendance. Come to my conference. Instead of giving you a conference ticket, I'm going to give you an NFT. You can do this for sports gaming. You can do this for ticketing. You can do this for anything. I think that's where the next generation of crypto is going to be building utility out of NFT. And I think much like the rest of the crypto ecosystem, it starts with the end goal in the sense of how can we get to the nth degree of silliness and sort of work our way backwards, where you're seeing people selling, digital cats or crypto punks for hundreds of thousands of dollars, and now we're sort of working our way back into sanity and what these NFTs can be used for. So the use cases are all over the place, from a proof of ownership of a physical good, proof of attendance for an event, proof of ownership of a digital good, and all over. So it's really exciting to see this from the data perspective and seeing some of the products that people are building using our data pipeline.
What are you seeing as far as data, as far as how things are getting valued and the cost of things?
So the cost of all of these things is relatively low. I think most of it comes in the execution, right? So you're seeing some projects that are coming in, and instead of saying, oh, we have an NFT collection, they have a story. They're doing the marketing. They're building the brand. They're building the connections around it. They're building the distribution first through telling the story and getting people on board who are believing in this vision. And in some cases, it's done in a very different way. So there's one project, I'm not promoting anything, but it's called Cool Cats. And what they did first was they said, okay, let's get Time Magazine on board. Let's get a lot of these people on board who are going to buy into our vision of creating a shared intellectual property, right? So instead of Disney owning Mickey Mouse, what they've done is they sold pieces of that story to the community and letting the community own that and buy in fractions of a percentage of it. So there's only 10,000 Cool Cats, everybody owns one. That's how it's going. But you're seeing this turn into this unbelievable distribution mechanism where everybody wants to be involved and wants to own one, but the content keeps following the NFT. So it's like, imagine if we were to start today building our own I don't know, we wanted them to start a cartoon. Instead of getting the cartoon and getting distribution, it's starting with just a piece of digital art, and we'll watch it take on a life of its own. So you're seeing this, but what's interesting about some of these other projects is how they go to market, because they go to market with a certain amount of exclusivity around the token, so or a certain exclusivity around the NFT, which is only a certain amount of the NFTs will exist. But then each NFT is collateralized by a token, so a cryptocurrency in itself. And so let's say you'll have to buy, there's only a finite amount of the cryptocurrency. So you see the price run up of the cryptocurrency because you have to buy one coin and exchange it for one cat in this, for one cool cat in this situation. And every time you trade a token for a cat, token gets burned. And so it just doesn't exist anymore. And what you're seeing is the run up of the price of the token is going up to like $25,000, $35,000 for one token. So that means the price of one cat is going up to $25,000 or $35,000. And then when you see the secondary markets, because of this, it grows exponentially. So I'm using that because it's a great example of a full cycle NFT. And it's one of the few ones that the whole collection has a, I think it's a 10 Ethereum price floor right now. And 10 Ethereum one Ethereum is $3,000 US right now, roughly. So it's like $30,000 for a JPEG that was created, in the last 90 days, which is just crazy.
That's unreal. That's unreal. Okay, Matt, I want to talk to you. You had mentioned this is something that Game On is doing, gamifying an NFT. Can you explain to us what that means?
Yeah, so it really is doubling down on what Eric said around utility. In general, a big problem right now is that there are a lot of NFT projects just minting NFTs. And I think there are going to be a lot of dead bodies on the side of the road because there is a lack of utility. So we're really bullish on that utility piece. We think that's going to be the next wave of NFTs. And when I say we, our chief product officer was head of sports at Dapper Labs, where he conceived and brought to life NBA Top Shot, one of the biggest NFT projects in the world, if not the biggest. So we're bullish on utility, and gamification is what is the utility that we're giving to NFTs. So we're a B2B technology company, so we're not minting and selling the NFTs themselves. We're working with teams, leagues, TV networks who already have a marketplace where they're minting and selling and facilitate NFTs, and we're just adding a gamification layer to that. So for example, if it's if we're working with the NBA, which we're not, but using them as an example, they have an NFT marketplace where they're selling moments, but we take those and once you get your NFT, you can use that NFT in a prediction game. So if you want to choose LeBron to score the first dunk in an NBA game, you need to go and get the LeBron NFT first from the marketplace, and the UX will be kind of dragging that across and making your prediction using the NFT. Then during that prediction game, you're winning more exclusive NFTs that the scarcity is tied to how many people got a certain prediction right. So if you chose something really unlikely to happen during the game and only 37 people also chose that, then only 37 of that specific rewarded NFT will be minted. So it's super, super scarce. So we're just adding a layer of gamification to the collectibles.
And so the NFT is being created in that moment, depending on how many people participated, which creates it more exclusive, like you said, if it's a smaller number versus a larger number. Is that right?
Yeah, exactly. That's one of the features. And then, once you're collecting the prediction game NFTs, they might give you exclusive access to the VIP area of the arena, or a one-on-one conversation with an athlete, or exclusive content and experiences that again give the NFTs another layer of utility.
Where is this going? Is this just going to keep building? What's next? What trends are you seeing? What's your prediction?
Yeah, I think to Matt's point, it's really going to be an environment that's dominated by the people that are being the most creative and really creating a curated experience around the NFTs itself. I do not think that we work in an industry where you can mint an NFT and then orphan it out into the marketplace and expect to have a continued functionality of demand. It's just not going to work that way. And I think, again, if you look at the example of Autograph, where you have ultra elite AAA players and things of that nature, yes, that experience will exist. But that is a very, very limited part of the marketplace. And as we continue to go into exploring a number of other much potentially bigger opportunities, there has to be a campaign focus around it. And an example I can give at Wonder is we're working with, one of the largest rock bands of all time. And in this engagement, we're building a mobile game that is fully gamified and such that there's elements such as trivia, building avatars, and on a weekly, bi-weekly, and monthly basis, they actually get to interact with the band themselves. We're doing this also with 2 top 5 rappers in the US, where we're actually creating an NFT component, but the NFT side serves as an opportunity of loyalty, accruing it by going to shows, accruing it by playing the game. The amount of time that you've spent playing the game, you're earning it, and then purchasing either through fiat or through cryptocurrency. This ability to then, at the end of a 2-week period, say, with this one rocker sitting down and saying, hey, in 1976, when I made this song, and only 5,000 people are watching it, and by virtue of the amount of time that they've played the game and the style of engagement that they've had, they've earned NFTs in the way to be part of this. And at the end of the experience, they are afforded the opportunity to purchase the video in the form of an NFT. So again, a much broader kind of holistic approach to utilizing NFTs as utility. And I think that's something that we're all talking about here. So in my opinion, that's where this industry becomes long-term sustainable and ultimately lucrative. But the world of thinking that NFTs as a standalone product is just going to flourish is, in my opinion, foolish.
Interesting. Eric, what do you think? What's next?
So there's a few things here. There's stuff that we're already seeing, and what we're seeing is probably what's going to be next. Because when you talk to the people who are building stuff and you're the data layer, they ask you specific questions, and if you read between the lines, you can figure out what they're doing. I think that the future is what's coming next is NFTs for most cases, and I think some projects that are not building NFTs on public blockchains are going to wake up to a staunch rude awakening. That a lot of the hype around NFTs are in the resale value. They're in the ability to earn things. They're in the ability to live on a public ledger that is transparent, that is auditable, that anybody can find out what's going on. And what you're seeing from our side is people are starting to build products to understand who has what NFTs in their wallet. What do they have? How can we via cryptocurrency or minting our own NFTs, give them invites to specific events? How can we know, not even by them purchasing an NFT, just by knowing what they have? How can we give them things? How can we invite them to things? How can we incentivize them to do behavior? Almost like email drip marketing, but you're seeing it via NFTs. And you're seeing this actually start to work and start to happen, which is just kind of amazing if you think about it. Like it's absolutely brilliant. And we're starting to see that, and it's not always for just who has the largest collection, but who's shown up to the most events, who's done things, who's participating, who's involved in the space. I think that's where it's going to go, and this is how you're going to be able to track super fan activity, because there'll be some people who will just, because if these NFTs are on an open public blockchain, some people will just start buying more of them, and some people will just start earning more of them, but each has their own means of being rewarded. So I'm really excited to see what products get built from this data and how the data gets utilized to make some of these things a reality. So it's really exciting to see.
And I guess too, speaking to that side of things, as a consumer, you also start to create value in yourself just based on what's in your wallet, right? All of a sudden, you create a value, just in that. Wow, that's really interesting. Matt, what is next for us?
I think what is next is that every single person on the earth is going to use NFTs. That's just, it's the utility to go to a game, to go to an event, to listen to a song, to watch a movie. Like, you're going to be eventually watching and consuming all of those things via NFTs. People ask now, like, what's the demographic of NFTs? And right now it's the gamer community, it's the trader community, they're the first adopters, but it's going to be everyone. It's like, back in the day when music went from disc to digital files, there were people who said, no, I want my disc. I'm gonna keep listening to music on my disc, but obviously now we're all listening through digital files. So we liken it to the same. We think eventually, it might be 5 years, it might be longer, but we're all going to use NFTs in our everyday lives to consume content, to listen to music, to go to events and whatnot.
What would you do if you owned the Boston Garden, Central Park, Dodger Stadium, or Maracana in Rio? Not literally, but virtually. You might buy a piece of land. You could experience it in 3D and augmented reality, visualize it, program it, build secondary market value. You could host an event or race a game, all the while bringing digital to physical and physical to digital. You could even just sell sneakers and gear on that property, virtual property. You could watch 3D or AR broadcasts live, you can watch highlights and replays. ePlay's created a sports metaverse. It's compatible with our apps Clocked, Big Shot, and Fan Freak. It's a new platform that allows users to virtually participate, host, profit, and design sporting events. Athletes and fans can own their own greatest highlights. We can witness that history, sometimes live, and we can own the moments, experience it in physical, augmented reality in 3D, always with the latest stats, rewards, and data. And of course, we implement economic and technology models such as in-app purchases, advertising, and NFTs inside of the metaverse, the sports metaverse. Our NFT platform is based on Clocked, ePlay's AR fitness app and sports network. This Clocked World virtual real estate platform allows users to purchase property, landmarks, natural wonders, stadiums, race courses, fields, baseball diamonds, golf courses, holes, race courses, and so on. Property owners can buy and sell virtual real estate on Clocked World. Property owners can also develop the virtual property with sports scoreboards, leaderboards, stats, events, games, hot dog stands, merchandise sales, and so on, gambling, and races. ePlay's built games for ESPN, Sony Pictures, Intel, Time Warner Cable, and others. Games for sports, the Academy Awards, the Los Angeles Lakers, and FIFA World Cup. We've built games with 7-time NBA champion Robert Horry, Olympic decathlete Michael Smith, and comedian producer Howie Mandel. Partnerships with Spartan, Instamall, and others bring the physical and digital together, and that sports world will join in what we're calling this Clocked Sports Metaverse.
Hello, everyone. My name is David Vinokurov. I am the CEO and president of Fandom Sports Media. Our symbol is FDM on the Canadian Securities Exchange. I'm here today to talk about some of our initiatives around non-fungible tokens, which have been soaring in popularity recently. Fandom Sports is a data presentation company. So what we do is we present data from live feeds and other sources from which we collect that allows people to interact with streamed and broadcast content, to make predictions, and ultimately under the gaming licenses that we have to actually place wagers on what they see happening in real time from their favorite streamed or broadcast content. The explosion of the popularity of NFTs, which in essence are a digital collectible built around unique curated content, has really sparked a creative fire under our development staff. What we're doing in the NFT space is, as consumers are watching content, whether it's esports, sports, or frankly any streamed content, they're going to be able to actually record an NFT on the fly, select from that video image a specific still or the actual clip itself, and then able to purchase that NFT from us. Furthermore, if a consumer of content selects a stream to record, and more than one person selects that stream, that NFT would actually go to an auction in a marketplace that Fandom Sports is building. And then, from the sale of that NFT, then we were able to share revenues with our partners. Now, we see a lot of firms out there that are looking at creating unique content with specific artists, specific teams, or just unique artists in general. Fandom will obviously be doing that, but what we're really focusing on is creating a better system that allows for the scalability. There are a lot of challenges in terms of gas fees, which are the cost to mint NFTs, and the time that it takes to actually get the possession of that NFT once it's sent out. Fandom is taking specific steps within its marketplace to address those issues in the fundamental ecosystem itself, and to create some unique economic benefits for the creators of those NFTs once it's sold and then resold or retraded and so forth. So we're going to have a lot of news over the next couple of weeks and months outlining those initiatives. We're looking to increase the user engagement across all streamed content, increase engagement across the creation of NFTs, and present unique technological solutions that we're looking to deploy at scale, both within our platform, on a business-to-business level through licensing to other platforms, and ultimately as a contributor to the overall ecosystem. For more information, people can visit our website, fandomesports.com, or you can look us up on the CSE. Our symbol is Frank David Mary, FDM. Looking forward to keeping you all posted on all our progress, and it's an exciting fall coming up ahead for the company. Thank you very much.
Good afternoon. My name is Alan Paul Silverstein, CEO and founder of Imagining R. We are a mobile augmented reality company focusing on engaging fans for sports teams as well as consumers for business. We are traded on the CSE under the symbol IP, and we really have been focusing on global sports opportunities. Our clients include AT&T, the NBA Sacramento Kings, La Liga soccer teams, Valencia and Real Sociedad. We just opened a Brazilian client as well. And we like delivering instant AR campaigns no matter where someone is around the globe and at any location. We have a self-publishing, patented platform that allows any company, any person, any business, any sports team to actually create their own activation, similar like you do in social media, instantly and deliver them to any location. We're excited as we continue forward as the market opens up post-COVID, and we're seeing major growth with augmented reality in the market. And we also are a certified Microsoft partner. I believe we're the only certified Microsoft AR global partner for AR in the world. And we also have 7 patents. So we're excited to be part of the CSE. We're looking forward to building out AR as the year continues. And as stated before, it's Imagine AR. Our symbol is IP. And if you're interested in looking at how to create your own AR activations for your retail store, sports teams, or business, just look up at our website, imaginear.com. Thank you.
Hello, my name is Jonathan Hoyles. I am the CEO of Perk Labs. We operate an omni-channel marketplace and mobile payment service with digital loyalty rewards at its core. Our vision is to be the dominant mobile-first digital loyalty reward platform in North America. An easy way to think about our business is it's like a combination of Etsy and Alipay, but with digital cashback rewards. Our marketplace is like Etsy in a sense that you can buy third-party sellers' products directly from our marketplace, and our mobile payment service is like Alipay in a sense that you can use our app to pay in person by scanning a QR code at restaurants and other offline businesses. Our platform, Perk Hero, includes features such as digital gift cards from major brands like Amazon, Walmart, and PlayStation, Shopify integration with Shopify merchants, pre-order and pickup, and an at-the-table payment system for restaurants, multiple payment methods, including Apple Pay, Google Pay, BitPay, Alipay, and debit, and our own digital currency called Perk Coin. 2 important drivers for our business in the near future are 1, we are developing Perk Coin into a cryptocurrency, and 2, we'll be rolling out a licensing program where licensees can resell our mobile payment solution to businesses in their local community in exchange for a licensing fee and share of revenue. So if you're an investor that's interested in mobile payment, e-commerce, and blockchain technology, and looking for a company that has an innovative business model, you can learn more about us at perklabs.io, and you can find our stock trading on the CSE under the symbol PERK, and on the OTCQB under the symbol PKLBF.
And there you have it, the second half of our production of digital securities in the capital markets. Thanks again, Anna. I mean, that was a huge workload for you and the team to get through that. What was one of the big overarching themes that you saw, or something that you're going to take away from this?
You know, I have to say I see this in almost every emerging sector that we experience at the CSE, is the incredible passion and dedication that these people have to what they do. They work very hard. They're incredibly intelligent. They're professionals in the space. And I really do suggest that if people are interested in the space, go to these professionals to learn more about it. They know what they're talking about. So I think that was probably the most enjoyable part for me.
Yeah, and I look forward to seeing how this sector evolves, this theme evolves, and seeing how the companies that are in the space across all the different subsectors and themes that we discussed today continue to push the limits of what's happening in digital securities. So with that, I'm James Black. That was Anna Serin. We're the Canadian Securities Exchange. And we just want to thank our partners again for this event, including Purves Redmond, MMP, Gowlings, and CFN Media. Without their help, we couldn't have done this today. And we're looking forward to doing it again. This can't be the last time. So And if you'll come with me on the journey again, we'll have to do it. But I just want to thank you. You did a phenomenal job hosting and putting all this together. Thanks so much. You did such a good job, and I can't wait to see what you host next.
Thank you, James. I also have to thank all of the team members that helped us in the background here. Thank you to Barrington Miller and Neil Mull. And of course, yourself, James. Thank you for everything that you do to help us produce this.
No problem. And for you watching today, this will be on CSE TV for as long as you want to watch it. I suggest you go watch it again and tell your friends. So until then, we'll see you soon. And thanks again for watching.